well, good morning, everyone. Thank you all for being here. My name is Linda Knowlton, from FAMP, Immediate Past President and Education Chair. And once again, I have this honor and opportunity to moderate or at least make the introductions to one of our strong supporters of FAMP. And again, this year, a Bee's Knees sponsor, which is a title sponsorship for our 2023 annual convention and trade show. We always have the support of Angel Oak. We really appreciate and really appreciate our partnership and our relationship and moving today and moving forward, and of course always before in the past. So as part of the sponsorships, Angel Oak has 2 webinars, and this is their pre-show webinar. Our show is August 2nd through the 5th at Hilton Bonnet Creek in Orlando. We'll talk about that a little later. But I am going to make the introduction to John Gemmenodd right now. And then if there are questions that you have throughout this webinar, please type them in the chat box and John and I will monitor them. So John Gemmenodd, Regional VP of Sales at Angel Oak Solutions, is an expert and reliable consultant supporting brokers and correspondents. He has spent over a decade focusing on the non-QM lending space, and as he puts it, it's all I know and love. John has an impressive, diverse background ranging from retail and e-commerce to marketing and business development. The majority of his experience has been in the wholesale lending space. His favorite thing about Angel Oak is our ability to communicate through all channels of the business, from sales to operations to marketing. His hobbies include playing golf, staying fit, and cheering on the New York Yankees. John knows firsthand that utilizing non-QM can grow your business and keep your pipelines full. So it is my pleasure to introduce John Gemmenodd of Angel Oak Solutions.
Thank you, Linda. Appreciate it. And, you use the word in there, we really do relish and, honor our partnership with FAMP. So thank you for everything. And I'm only an expert because the 2 people I have on this call today are the most seasoned people probably in non-QM and really just crush their business. I've got Stacy Flanagan, who's been with Angel Oak almost 9 years. So Stacy, please introduce yourself. Excuse me.
Hi, everybody. Thank you again, Linda, for having us. It's an honor to be here. Appreciate it. I have been with Angel Oak, like John said, just about 9 years. And prior to that, I was also an AE in the subprime days, is what we used to call it. So been around doing this for a while. Love it. I'm in the Tampa Bay area in Florida, and look forward to helping everybody increase their business.
So thank you, Stacy. And then Scott Grubel, been with us here almost 7 years, and Scott's the top producer in non-QM. And Scott, please introduce yourself.
Good morning, everybody. I'm Scott Grubel, based out of Broward County, Florida, here in the Fort Lauderdale area. As John mentioned, been with Angel Oak for 7 years, and like Stacy, my career as an account executive has always been in the non-QM subprime space as well. So a lot of years of experience on this call in this space.
Yeah, and I think what you'll get out of Scott and Stacy today are really, when you're working and looking for a non-QM lender, is the seasonality of the AE. And and Linda, you and I talked last night. We talked specifically about Stacy, and there's no one who's going to serve between Scott and Stacy serve you better. We've got West Coast of Florida, we got East Coast of Florida, so we got everything covered. So today we're going to talk specifically about our bank statement program, right? It's about 60% of what we do. And it is a very, very underserved market. These are self-employed borrowers who take advantage of our tax laws in this country. And unfortunately, because of this tax laws, they can't qualify for a mortgage. And we know how hot still real estate is in the Florida market. And, it's those luxury homes that, those are not purchased by W-2 borrowers, right? They're purchased by self-employed borrowers who have the ability to grow their business and continue to grow their business in these times. So Everything we're going to do today is on our website. It's a very easy to navigate website. We're going to talk about the bank statement program. We're going to get into what we like to see and what we don't like to see on a 1003. We're going to talk about what credit looks like. What do we like to see and don't like to see on credit? We're going to talk about how to submit a pre-qual, how to get pricing, and then the best part we're going to talk about is how to market this business. And we're all kind of going through this trough of the lending industry today, but we're really going to show you. And we have another account executive in Florida, Carlos. We're going to leave the answers to the test at the end, but he always says, I'm going to give you the answers to the test before I show you the test. But we're going to take you through the test first, and then we're going to show the answers, because it's really how to market yourself in this environment. And I really believe, and I get really hyped up about it, but I also get disappointed because no one really takes full advantage of the tools we have to show you how to market this. So anyway, let's get started. Stacy, we're going to talk about, hold on, bank statement. Stacy's going to take us through the highlights, and let me know if you guys need this blown up a little bit, or can you see it well?
If you can blow it up a little bit, that would be great. These old eyes have
How's that?
I agree. Yeah, just a little bit more.
even with
More
my
than this?
If you can go, there you go. I think
All
that's
right.
good. See, is that good?
Stace, give us some highlights, please.
Yes, so trying to see if I can move that up a little bit. Okay, so guys, the bank statement program is designed for those borrowers that are self-employed or 1099 for the last 2 years. So basically what we're going to do, we all know that when you're self-employed, you're going to write as much off as you can through your taxes. So what this program is designed to do is it's going to allow us to use the deposits going in their bank statements rather than using their tax returns. Because we all know, again, when you're self-employed, you're going to try and write as much off as you can. You don't want to give Uncle Sam more than he deserves. So what we're going to do is we're going to calculate the deposits going into your bank statements, whether you're using personal bank statements or business bank statements. And we're using either 12 or 24 months of bank statements. And this can be done on a TBD property. When you get the bank statements, you'll send them over to Scott or I or your local AE that you are signed up with Angel Oak. We're going to calculate that income up front for you. And what's great about that is your realtor partners will really, really appreciate that extra step that we go through, because they may think that the borrower can only qualify for a $300,000 house based off their tax returns. But once we dive into their bank statements, they may be able to afford a $600,000, $700,000 house because we don't have all those write-offs showing. So the bank statement loan, we go up to $3 million. Minimum loan amount on that program is $150,000. Again, we'll use 12 or 24 months of personal or business. Now, if they have a business bank account, maybe they have two businesses, or maybe the wife has a business and the husband has a business, we can use 2 sets of business bank statements. So that's great. Again, giving you more income, giving you more purchasing power. You only have to be seasoned for 2 years on a deed in lieu, short sale, bankruptcy, or foreclosure. So we all know life happens, especially going back about 2-3 years ago when COVID hit. People got stuck into a little bit of a hiccup and maybe had to short sale their home or foreclose on their home. You only have to be seasoned for 2 years. So that is great. And also, speaking of COVID, I think John has a statistic about how many, at least here in Florida, businesses or self-employed businesses, especially when COVID hit. There's a lot of people that lost their jobs and opened up their own businesses. So this program is great for them because we can use the last 12 months. So maybe, when they first opened, they had the ramping up period, but now they're starting to boom. They're starting to get going on that. Did you have a statistic, John?
Yes, Stace. Yeah, thank you. So in 2020, new business applications grew by 24%, greater than 24% over 2019. It was the largest increase in new business applications in over 10 years. And in 2021, new business applications grew over 2020 by 22%. So, this is the fastest growing segment of the workforce we have today. And, there are more self-employed borrowers than VA borrowers. So thank you, Stace.
Yeah, no, thank you. I think that statistic is great because we don't realize the opportunities that are out there that we might be missing on.
And if we can
So-
add to that, the state of Florida has actually led the way in new business formations, I think the last 3 to 4 years in a row. So the
There you go.
opportunity for us here is even greater.
Yeah, because everybody's moving to Florida. So again, kind of back to the slideshow that John has up. So borrowers do have to be self-employed or 1099 for the last 2+ years. And this can be a purchase, cash out, or rate and term finance. And I'll go into the business expenses here in a minute, but it can be owner-occupied, second homes, or non-owner-occupied. We also do 1 to 4 units, condos, non-warrantable condos. If you do have a non-warrantable condo, those are huge here in Florida. Get with your AE, let them know why it's non-warrantable. There's so many different reasons a condo can be non-warrantable. Some we allow, some we don't. So just get, first thing you want to do is ask your realtor why it's non-warrantable. They typically know. And then get with your AE and see if it's something that we can lend on. The options for the bank statement program, our programs are all 30-year fixed, but you do have a 40-year interest only option. Right now, with rates being higher than normal or higher than it was a few years ago, the interest only option's great. It's 40-year interest only. The first 10 years is an interest only payment. So they only have to pay the interest only payment for the first 10 years, and then we will automatically convert it to a 30-year fixed after the 10-year period if they haven't already refied. If rates go down, they might end up refinancing into another one of our bank statement programs with a lower interest rate. But the great and unique thing to me on our interest only is we're going to recast that loan every single month. So if they want to put more money down towards principal, that next month's interest only payment is going to be interest only on your new mortgage balance. I don't know any other lender that does that. That to me is huge, especially right now with the interest rates being higher.
Stace, and it's the self-employed borrowers that really want that flexibility. They have a great month, not so great month, right? So they have that ability to put a chunk towards the mortgage or just pay the interest only.
Yes, absolutely. And then going back to, I think I missed a bullet point up at the top. If you're doing a business bank statement, we do want the borrower to be at least 50% owner of the business, where if you're using a personal bank statement, it's 25% ownership of the business. Now, if you're 1099, we know that you don't own any part of the business, but to us being a 1099 borrower, you are 100% owner, if you will, of your own particular business. So 1099 doesn't really work on that, doesn't really matter. But if you do own a business, it's 50% for the business bank statements and 25% for the personal bank statements. And then as far as expense ratios, we know that all businesses have expenses that they have to pay. When Scott and I are calculating the income for you up front, we're going to default to a 50% expense ratio, meaning we're going to use 50% of the bank statement deposits. If that works, great, we run with it, no questions asked, we move on. If it doesn't work and we need more income, we have options for that as well. So we can use as much as 85% of the deposits with a letter from a CPA or tax preparer stating what the expense ratio is for that particular business. And it's got to make sense. If they're working from home, IT, they don't have any inventory, they don't have any employees, that's somebody that's going to have a lower expense ratio where we can use up to 85% of the deposits. So Scott and I will look at that. We're going to look at it, see if it works on our default, we just give you your pre-qual and move on. Sorry, I was reading the chat. I was reading the chat. So
I got the chat. Don't worry about the chat.
to answer it. I'm like, wait, what? Okay, so it's just saying that if the loan amount is over 1.5 million, we do need a second appraisal. And we actually just added non-permanent resident aliens on this program. We did not allow non-perm before. So that's a big step for us to add the non-permanent resident alien. And we do go up to 90% LTVs on this program and as low as a 640 mid score on this program as well.
Yeah, thanks, Stace. Appreciate it. You covered a lot there. Thank you. Scotty, and then we're trying, we're doing a deep dive into bank statements. We have DSCR, we have full doc products, we have, a lot of other programs, asset qualifier, but we're specifically focusing today on bank statement. So, and really where I'm leading this, Scotty, tell us what you like to see on a 1003 when it comes to doing a bank statement loan.
Sure. So in general, on the 1003, and we'll talk about it in basically two different formats, because for self-employed borrowers, we have our traditional business owners. And then a lot of times what we'll have is your 1099 employees, and 1099 can be broken down into many subcategories, whether it's a realtor or an insurance agent. There's many different ways. And then we also see a lot of Schedule C borrowers. So let's talk about the business owner. So obviously, we want the basics. We want your 2 year of housing history. We want your name of your business, how long the business has been open. The most important thing, and what's consistent across the board for all of those 1099 business owner or Schedule C, is in the income section, you're basically going to either leave it blank, or if your LOS requires some sort of digit to be inputted there, you would put in a 0, you would put in $1. The reason we ask you to do that is because we, as Stacy mentioned earlier, are going to calculate the income based on the bank statements for you. Obviously, at the time that you're taking the application, we nor you know what that income calculation is going to be until the bank statements have been officially reviewed by us. So we ask you to keep that income there using that $, that 0, or like we said, if you can, leave it blank. Other than that, the 1003 is going to be completed exactly the same way you would on any conventional loan if you're preparing to put that file into DU or LP to try to run for some findings. Let's talk about your 1099. So your 1099s, sometimes you have a 1099 borrower who is being paid by many different sources. And typically for a 1099 borrower, we're using personal bank statements. In order for us to be able to use the deposits from all of the different sources that they're getting paid from, we do need to list them on the application. So we would ask you to list the name of all of the different employers that they may be getting a 1099 from. If it's a realtor working for one agency, great. We just list the one agency, we're good to go. Same goes for our 1099 only program, which is housed under our bank statement guidelines. Same exact scenario. If you're using 1099 only, you would list the name of the company that borrower is getting paid from via 1099, so we can count those deposits. And then lastly, if your borrower is a sole prop or a Schedule C, we want them to list, basically you can list that the borrower is, John Doe, sole proprietor, but we do want in the position section some sort of an explanation of exactly what they do for a living. So it could be handyman, could be, home caretaker, cleaning person, etc. That's really the most important section for us on a bank statement loan, is the business description of the 1003, making sure we have a clear picture of what they do for a living so we can properly calculate the deposits on the bank statements. And again, most importantly, making sure you have either that blank number or the 0 or the $1 in the income section so that we can go and calculate that income for you guys.
Yeah, thanks, Scott. And I think the biggest thing, Stacy mentioned it earlier, is we can do a pre-qual on a TBD. And I think that's huge. And then the other part is we're going to calculate that income for you up front. And that's the income that's going to be used throughout the entire process. So we're not recalculating income. And Stacy mentioned this earlier, you can, if you are meeting, excuse me, with a self-employed borrower, why not grab their, obviously, tax returns, but get their bank statements up front. And Stacy mentioned this earlier, you're probably going to see how you can increase their purchasing power by a minimum of 2, 3, and up to 4 or 5 times than using their tax returns. So And we all know how that, that $250,000 to $500,000 housing market doesn't exist today, right? It's anything over 750 and above. So, and again, it's not W-2 people buying those luxury homes, it's self-employed people. Stace, talk to us what you already talked about seasoning on bankruptcies and foreclosures. What are you looking for as a great account executive? What are you looking for trade lines and anything on credit reports?
Yeah, so again, when we're doing the pre-qual for you guys up front, we're gonna look to make sure that it credit qualifies. So we're almost kind of doing a pre-underwrite for you guys. We're making sure that the credit score is there, the trade lines are there, like John said. And what we're looking for is 2 trades for 24 months or 3 trades for 12 months. Now they can be closed trades as long as they had a date of last activity within the last 12 months. So if they just paid off an auto loan 6 months ago, that's fine. I'm going to use that as one of their trade line requirements. And also too, you kind of, and we'll do this for you guys, don't expect to have to do this, but if they just swapped out a car and they've only had a car loan, it looks like for 3 months, but we can scroll down and see that they had a prior car. We can add those together. So, Scott and I are going to do our due diligence. We're going to look at those trade lines. No bankruptcies or foreclosures or short sales in the last 2 years. Medical collections, we don't care about. They can have medical collections. Collections in the last 12 months or 24 months, technically we don't want to see. If it's something like a little Verizon collection or something like that, not a big deal. We actually also allow 1 times 30 on the mortgage in the last 12 months. Again, we know life happens, they're out of town, they forgot to make the mortgage payment, whatever the case may be. So we're pretty flexible on the credit. Allowing a 1 times 30 on the mortgage is huge. So we'll look at that again before we send you out the pre-qual. And also one thing that I forgot to mention before, as long-winded as I can't believe I forgot something. You can have a W-2 borrower as well. So I kind of call it a hybrid loan, where I'm going to use the bank statements for the self-employed borrower. And then if your co-borrower is W-2'd, we can use that W-2 income as well. Again, increasing their purchasing power. I never want to see tax returns on this program. We would use the W-2s and pay stubs for that borrower. And then of course the bank statements for the self-employed borrower.
Yeah, Stace, great. And almost I get chills sometimes, just how, like Stace says, they will pre-underwrite a file, and there's no people better in the business than our account executives, right? They'll look at credit, they'll do income, and if God forbid they don't think 100%, we have a help desk that we can go to get that approved, and that approval at that time at the pre-qual stage will follow that through. We understand how important your referral relationships are, and we do everything up front, calculate the income, pre-underwrite from a credit perspective. We're going to do all that up front. You might think, oh my God, why they're asking me for this now? Up front, it's to help you close your loan faster. We have a question here, Scott. I'll ask to you from Mario. Programs 24 to 12 months. I know Stacy talked about it from maybe when their business is taking off. Scott, talk about, whether you like 24, 12 months. Give us a little bit of scenarios that you've seen, why you would go 12 versus 24.
Yep. So we do offer both the 12-month option and the 24-month option. What I like to recommend to all of my originators is when you're discussing this with your borrower, always request the 24 months of bank statements. The reason why is when you send those over to Stacy and I, we're going to run the income, but we're going to break down that income into a 24-month income and a 12-month income. And then we can look at the picture and say, okay, which is the one that's going to make the most sense for the borrower? If the 24-month income gives us sufficient buying power to purchase the property they're looking to purchase, then we're good to go. We can run with the 24 months. But there's a lot of cases where if the business is doing what they should be doing and it is increasing, we will see a bigger income number on the 12 months. And then we can utilize the 12-month bank statement program to take them from, I don't know, a $500,000 home to a $600,000 home. So best practice is get the 24 months up front. Let us do the work and run the numbers for you. We're going to get back to you with both numbers, and then we'll sit down and put our heads together to figure out which one do we want to use to best optimize that buyer situation.
Yeah, thank you, Scott. Appreciate that. Stace, talk about, it's not a question that's come up in the chat, but we get it a lot when we do these webinars. Talk about the CPA letter, maybe, and dive into a little bit deeper. You talked about expense factors earlier, but kind of, you mentioned defaulting to a 50%. Talk about, just when you need a CPA letter and some other examples of expense factors.
Sure. So again, we default to a 50% expense ratio with no CPA letter. Now, if it's something with a high expense, high overhead, like a full-blown restaurant with liquor, staff, dinner service, that's going to be a little bit higher of an expense ratio. We're going to use a 70% expense ratio on something like that. Or if you have like a major construction company. And again, we'll look at this with you. We'll talk about it. How many employees do they have? How many locations do they have? We might jump on their website and see what information we can find on that. And then there's also the other side where maybe it's a food truck. We can use a lot lower of an expense ratio on a food truck, or somebody that just has one retail office, or maybe somebody that works from home, but it's a online. We see a lot right now of online businesses, social media people. That is coming up so much right now with this day and age, and with these millennials, that they're doing everything online. They're doing all these tutorials and making buku bucks, and they're not buying any product. They're being given the product, and they promote it and sell it. They don't have any overhead. So something like that, we can use as little as maybe a 15% expense ratio. So meaning I can use 85% of the deposits. They have a freestanding retail store with three employees. That may warrant a 30% expense ratio. So we're going to look at it. We're going to look to see, again, we have a questionnaire that the borrower will fill out that basically just says, how many locations do you have? Do you work from home? How many employees do they have? That's going to help us determine a fair expense ratio if our defaulted expense ratio is not working for our DTI. And when we ask for the CPA or tax preparer letter, it's simply going to state the expense ratio for ABC food truck is 25%, signed and dated. It can be that simple. And we'll use we'll default to a 30% expense ratio, meaning I can use 70% of the deposits.
Yeah, Stacey, and again, this is all done up front, guys. This isn't, let's wing it and throw it in and see what happens. This is all done up front. Scott, Mario had is there pricing difference between 12 and 24 months? That's the question.
Great question. There is a slight increase to the rate if you're using 12 months bank statements only at 85 and 90% LTV. So if you're at 80% LTV or below, there is no rate adjustment. It's the same rate for 12 or 24 months. If you're going to go 85 or 90% loan to value, there's a slight loan level pricing adjustment to use the 12-month bank statement program. The beauty is we have the option always.
Scott, you mentioned it earlier when you were going over to 12 and 24 months. Get us 24 months. I know some people just let us calculate that income for you, because they might have decline in income in the most recent 12 months, and we'll say we'll drop off the previous 13 to 24. So let us do that heavy lifting for you. Just get those 24 months. And as I mentioned, I do my public service announcement every time, is if you're a meeting with a self-employed borrower, get their tax returns. And at the same time, don't wait until they have a contract and then realize they don't qualify. Get those 24 months of bank statements up front, and we'll be able to close your loan. Scott, how long does it take to us do a pre-qual with bank statements? How long does that usually take turn time?
I would say you're looking at 24 hours. Sometimes we're able to get them back sooner. For the most part, you're looking at about a 24-hour turn time from when you submit the pre-qualification to us for us to go ahead and get that income calculated for you and get back to you with that pre-approval. As John mentioned earlier, when Stacy or I send back a pre-approval, guys, that is in essence our version of an approved eligible that you would get from an AUS. Sometimes we'll send it back as approved with caution because there were certain things we noticed on there that we need to look out for. So we have that ability as well. But in essence, when we send back that pre-approval, we're doing a manual upfront underwrite of that file with full income qualified. And so we're sending you back our findings just like you would see on an AUS.
Yeah, Scott, that's, that I can't emphasize it as better than what you just did. It's, I mean, Scott and Stacy, we've got between the three of us almost 30 years of experience just with Angel Oak. So, we know the loans we like to do. And, Stacy went down that route earlier. Almost 30% of the loans we close don't meet our guidelines. And you know why? It's because of Scott. It's because of Stacy. They know what we can close. So it's the experience and I mean, they look at 100 deals a month or even more, almost 200, 250 deals a month they look at. And their reputation's impeccable. So it's just, that's what we like to do. Stacy, there's still, Florida's still a hot market. Talk about delayed financing.
Yeah, so delayed financing is huge, especially what was it about 10 months ago where they had backup offers after backup, 5 deep of backup offers. And even now we're starting to see that again pop up here in Florida where there's a backup offer or cash backup offer. Like how do you compete against that? So what we will do, we'll allow delayed financing. What delayed financing is if somebody, they don't want to miss out on the house. So they're going to pull money out of their 401k or whatever the case may be, buy the house cash, but now they need to recoup it or they need to put it back into their IRA before they get penalized. We will do delayed financing. So we will refi that property the very next day, recoup their cash. We're not even going to hit them for cash out. We're going to treat it as a purchase. We're going to source the funds that they used to pay cash, make sure that they were the borrower's own funds. And then we're going to do the LTV and rate as if it was a purchase. So if they qualify for 90% on a purchase, I'm going to give them 90% of their LTV on their cash. I do have to use the purchase price, not the appraised value. We can't use the appraised value until after 6 months seasoning, but it's a great way for people to get into the house, know that they can recoup their cash and put it back into the market or into their IRA before they hit a penalty.
Yes, Stace, I have a quick question here do we source and season down payment funds?
Yeah, that's a great question. We do. We source and season down payment funds, but only for 30 days. So that's not a whole lot. So you can get the, John knows.
Stop it, Stacy. Stop. I know where you're going. Go ahead.
Mattress money. You might want to stick it in the bank now. Yeah, I'm just saying, stick it in the bank, let it season for 30 days. Let's start working on your loan, get it underwritten. Don't send me the assets yet. Wait till they've been seasoned for 30 days and I get that bank statement that doesn't show a large deposit. That's the key. Because if I see a large deposit, I'm going to have to ask you where it came from. So give me that next statement that doesn't show the large deposit. And there we go. We got our seasoning for 30 days. And we've also cleared the loan, except for the assets. So we're ready to go. As soon as that new bank statement drops, you give us the assets, everything else has already been done and cleared. Now you're heading to closing.
While you're hot, Stacy, talk about gift funds.
We do allow gift funds too. So gift funds, as long as the borrower has 5% of their own funds, plus the 6 months reserves, just on the subject property, our reserves are only on subject properties. So if they have 5% of their own funds plus 6 months reserves of their own funds, the rest can be gift. A gift will be from an immediate family member, and we don't ask for a bank statement from the giftor, just a gift letter, and then proof of the wire either going into our borrower's account or going straight to title.
Thank you, Stacy. Hey, Scott, talk about, we get a lot of this. What if someone has multiple businesses? Can we use multiple bank statements?
That's another great question. So the short answer is yes, we can. In most cases, we can use up to 2 businesses. We have made exceptions in the past to use more than 2 businesses. So you would be basically using 2 business bank statement accounts. The key is we want to make sure that there's no commingling of funds between those 2 business accounts. So if they're operating truly as 2 independent businesses with their own sources of revenue, paying their own expenses, et cetera, then we usually will have no problem with 2. And in some cases, as I said, with exception up to 3. Most important thing is making sure there's no commingling there.
Yeah, great, Scott. Yeah, because I mean, even people have side hustles, right? They're trying to diversify their income. So Stace, talk about, and it's ironic, we got a question here about realtors as far as expense ratio, but I'm going to share another statistic. 9% of the loans Angel Oak closes under our bank statement 1099 program are actually realtors. And we'll touch on that when we get to our marketing portal. But Stace, what do you see as the most common expense ratio for a realtor?
Definitely the 15% is a very common expense ratio for a realtor because they don't have any overhead. Now, if they're a realtor broker where they actually own the real estate company, that's going to be a different, again, we're going to default to how many employees, how many locations. But if they're a 1099 realtor for a real estate company, you're looking at using a 15% expense ratio.
Yeah, thanks, Stace. And again, if there are loan officers on this call, if you get 12 realtors in a room, you're probably going to close one of their loans. So, Scott, talk about Zelle payments. Let me back up. You talked about no commingling of funds, between those 2 business accounts or whatever. Right. Talk about how do we look at Zelle payments? And I know a lot's going to have to do with what that person does.
Yeah, and another great question, because obviously the way business and commerce works today is there's so many different sources of income and payment, whether it be Zelle, Cash App, PayPal, Venmo, et cetera. So we accept these. We accept these all as sources of revenue into a business bank account. Obviously, on a personal bank statement program, we accept those as well, assuming that those types of deposits would be customary for what the borrower's employment is. So let's take, for example, one I recently did was a barber. Based 1099 independent contract barber, did not own the barber shop, but he rented a chair at this particular shop. And 99.9% of the deposits going into his account were exactly that: Zelle, Venmo, Cash App. Basically, he uses every different source there is to receive payment electronically online. So we were able to count all of those deposits and qualify that borrower. So the answer is yes, we do accept them.
Yeah, thank you, Scott. Appreciate it. I know we're about 40 minutes into this. Scott, we talk about how great a job you guys do as a pre-qual. Let's talk about pricing and how to get a pre-qual to Angel Oak. So,
absolutely, it's one of my favorite things to talk about because I think we're unique in the sense that this is our pricing engine. You can get here when you get to our homepage. You'll see it right on the main screen. There's a little button that says non-QM quick quote.
Hold on, Scott. I'm going to back up there. Let's do that right here.
Okay. Yeah. So right on our homepage here, you have non-QM quick quote. That's our pricing engine. You click there, takes you to this next page. And the first thing you guys should notice is that there were no credentials required to access this. We are unique in the industry in the sense that we put our pricing out there. And in essence, our guidelines, because this is a smart, a dynamic, and active pricing engine. Pricing is updated to the minute, and it's also updated with guidelines. So you go ahead and enter your scenario here: 500,000 loan amount, 760 credit score. We'll put in a loan to value of 75%. Florida property. The housing section will leave a 0 times 30. That's where you would input any potential lates on your property, on your mortgages. Single family residence purchase. Income documentation, when you guys click there, you'll see every program we offer is listed there. So for the purposes of this one, looks like we're going 24 months business bank statements. Well, this is a primary residence. Your borrower's a US citizen. We're going to request a 30-day lock, but John, if you click on that drop down, you'll see we do offer options for a 45 and a 60-day lock. If you wanted to go interest, waive your escrows or go interest only, you also have the options to select that here. And then in your compensation type, you'll see borrower paid, but we do offer lender paid pricing for all of our approved accounts. That's another thing that makes us a little bit unique in the industry. But for the purposes of the pricing in this pre-qualification, we'll leave that as borrower paid. And what you'll see is at the bottom, you're going to see all of the programs that this borrower qualifies for. And we're going to list them in order of the best pricing. So as you'll notice here, guys, we have two different bank statement programs pricing. We have our bank statement elite and we have our bank statement program. The beauty of having these two options is that there's always options at the end of the day, different resources to qualify your borrower. The bank statement elite program is going to be a little bit more strict in terms of guidelines. Certain things like if the borrower owns any additional properties, we'll need a couple of months reserves for those properties. Credit requirements is a 48-month seasoning on any housing events, foreclosures, short sales, bankruptcies, et cetera, versus 24 months on the regular bank statement program. So those are all the different things that your account executive is going to look at when we're doing the pre-approval. And we are going to send you back your pre-approval on the program that best suits your borrower and gives them the best price. But as you can see here, you have options. So in this case, we'll look at the bank statement elite program. Now, you see the 7.5 rate there. That's usually going to be either your par rate or your closest to par rate. But to see the full rate stack of the dynamic pricing, you want to click on view rates always. And you'll see that'll open up all of the different options we offer. In this case, 7.5 was exactly par, but we do offer options that provide lender credits. If you increase that rate, you'll see that there's a lender credit associated that's being paid back to your borrower. Or if the borrower wanted to pay some discount points to reduce the rate, you'll see all of the options there as well. So let's say, you wanted to proceed and select a rate and you want to submit this file to Stacy for a pre-approval. You'll click on the rate you want to send the pre-approval with, hit that select option button. That'll take you to page 2. In page 2, you have the ability to upload a 3.4 file if you have it buttoned up. If you don't, you're still preliminary stages. You just want to get the 1003 credit and bank statements to us to take a look at and calculate your income. You'll just hit the next button. And in page 3, what you'll be able to do here is fill out the name of your account executive, of course, your company name, your NMLS ID, your contact information, and your borrower's name. And then you'll see in the boxes here below, you can literally drag and drop your 1003, your credit, your 1008, and the bank statements. In this box here, you can literally highlight 24-month bank statements and in one drag, drop them all right in there. They'll automatically populate for you. And then as you scroll down to the bottom, you'll answer a couple of more questions regarding the credit history, and then you'll hit submit. When you hit submit, that file has gone securely and electronically directly to your account executive. We are notified immediately that a pre-approval request has been submitted by you, and we get to work on it immediately. As I mentioned, in most cases, we're able to get that pre-approval back to you within 24 hours with our findings.
Yeah, Scott, I mean, it's truly, Stacy's mentioned it, you mentioned it. We are pre-underwriting this file. That's an AUS, response, approved, denial, or, approved with caution. And again, I'm really biased, but we got the best in the nation, not just on this call, but across the country. So,
and specifically, John, to the bank statement program, I like to say this is stronger than any DU eligible accept or approved eligible from LP, because remember, when you're running AUS, it's reading your 1003, but an underwriter has not looked at the tax returns yet. An underwriter has not looked at the W-2 and pay stubs yet. When we're sending you back this pre-approval, our bank statement review team has done an official income calculation, and that income has been calculated. When that loan gets submitted to underwriting, that is the income the underwriter is going to be using. There is no re-underwriting the income. So I always like to say, in my opinion, our pre-approval on a bank statement loan is stronger than getting just, you know, a DU or an LP approved eligible. And more importantly is, I think these loans are actually easier to close. Keep in mind, we do full doc loans. We have many full doc programs. Bank statement loans are easier to close because of that fact. When you submit that loan to underwriting, the income's done. We're not worrying about that. We're looking at appraisal, title, insurance, and all the other nuances of the loan.
Scott, I can't disagree with that at all. I mean, I mean, you can give tax returns to 10 different people, you get 20 different calculations, right? So it really is. And again, it's all done.
Especially self-employed.
Yeah, and your referral sources, we understand how important they are to you. You know, I would suggest that 50% of the loans we get for our bank statement have fallen out because the tax returns couldn't work, right? Or they weren't calculated properly, or they put X on their 1003, like you said, Scott, and actually it's Y. So, and then, you know, then everyone's hair's on fire and we're getting a bank statement. So Stace, let's talk about, you know, we've got about another 10 minutes here. Let's talk about, and this is the most favorite part of what we do, right? Let's talk about the marketing side. I know we get a little frustrated because people don't take advantage of it, but it is, you talk about an underserved market. This is an underused portal in our business, and, you know, but we get so excited about it because it's so easy. We make it so easy for them.
Yeah, so when you go into, this is where you will need your login credentials. So if you don't have login credentials, reach out to your account executive. They will get you set up with login credentials. So once you go to our website, again, angeloakms.com, and you click on log in, you're going to put your credentials in like John's doing here. And then you'll be able to access our marketing portal. So like John said, our marketing portal, you guys, is free. It doesn't cost you a dime to use. You can print all of the flyers if you're going to do a realtor presentation, a builder presentation, open houses. If you're going to just anything that you're going to use, even if you just stick them on social media, there's so much for you guys to use here. It's custom, everything is customizable with your info on it. You only enter your info once and it goes on every single flyer. So John's got a flyer pulled up, the bank statement flyer. So in the upper left corner of the page, you'll see where you can upload a left-hand side logo, a right-hand side logo, and even your photo. So this example that we have here for Gil, he's got his logo up there on the left-hand side. I've even had people do fun stuff, like maybe their favorite football team as a right logo, something fun, catchy, you know, obviously to know your audience, depends on your audience. Nobody's a buck, wouldn't put a buck up there. And then all your information. So your name, your phone number, your email address, your address, NMLS, the states you're licensed in. All this info, and even if your company requires you to put a certain disclosure on there, all of that is populated. You click to see changes. It'll show up on your bank statement, and then where John's arrow is, you'll click on there, you'll see all the different bank statements that we have to offer. So as soon as you click another bank statement, all your info is already populated on there. So you literally go in, you do this once, your information is already on every single flyer. You decide where you're going to market this to or who you're going to market it to. Go in there, pop up a new bank statement or DSCR or condos or whatever you're going to be marketing. We even have Spanish flyers if you have Spanish audience. So this to me is great, very unutilized. People are not utilizing this free marketing right at your fingertips, you guys. And again, Angel Oak is nowhere on there. They think it's your program, not ours. And again, just it's a great opportunity for you guys.
How much does it cost, Stacy?
It's free, zero.
Let's talk about our social marketing, Stace.
So social media, as we all know, is huge right now. Whether you're Instagram, Facebook, Snapchat, whatever it is that people are using nowadays. So these are just little, like, just keep in front of somebody. Doesn't have a whole lot of information on it. It's enough to catch somebody's attention. You know, out of sight, out of mind. I have brokers that'll post one once a week. Just again, it's just to keep in front of their audience, saying, hey, I just closed a bank statement loan, or, you know, just to remind them of what you guys have to offer. And again, they're just quick little posts already done for you. You don't have to look for them. They're right there. Just post them on your social media page once a week, you know, however often you want, just to keep out there in front of everybody.
Yep. And then you wanted to talk about realtor presentations?
Sure. So we'll do realtor presentations. We have a couple of good realtor presentations. We can also customize them. Scott and I, or any of your AEs, will go with you, whether you're doing an in-person presentation or a Zoom. We are more than happy to sit in, do the presentation with you or for you. We are the experts in this program, so if you're nervous or don't really know the program very well, don't worry. We're there to support you. We're there as your investor. We're not going to talk about Angel Oak. We're going to talk about your company and how you're a one-stop shop, and that we're just one of your investors that you have to utilize. And again, we can customize the presentation. It'll be all your information on there. We can take out slides. We can add slides. I just did one recently where they also wanted to put in other programs that they do, like construction loans, which I don't do. But again, this slide is your slide.
Right.
So they added some slides at the end regarding their 203K, their construction to perm. So it was great because I was doing the presentation for them. They took over on the last 5 slides of other programs that they have. So these presentations, again, are super easy, super good, and we are more than welcome to come out there, and more than happy to come out there and do these presentations for you or with you.
Yeah, I don't know why more loan officers don't take advantage of the pros that we have, like Scott, Stacy, and all across this country. It's, I'll use Mario, asked a couple of great questions during this presentation, and so if we were presented with Mario, we're going to talk about bank statements. And what are you going to do when you have a self-employed borrower? You're going to go to Mario, right? What are you going to do when you have a 203 loan, a construction loan? You're going to go to Mario. That's everything gets thrown back to the loan officer. Nothing said about Stacy, Scott, myself, Angelo. It's all about you, and the focus is you. And I'm telling you, when you do these presentations, there are aha moments. And like I said, 9% of the loans we close are actually realtor loans. So if you get 12 realtors in a room, do the math, you're probably going to close one of their loans, maybe not for their primary, but when we talk about the debt service coverage ratio program, they're probably going to want to buy an investment property. So Stace, Scott, great job as always. You guys are the best of the best. And I mean, I love working with you guys. I mean, so Linda, we'll throw it back over to you.
Love you too, John.
Little bromance going here as we speak.
We won't leave
right?
Stacy out of it. I love Stacy. I love
Well, if there are any last questions, just type them in the chat. I'm sure that that John, Stacy, and Scott would love to see any last minute questions. It was a great presentation as usual. You guys really started from beginning to end with so much content, and really good content. I just had one quick question that kind of stuck out as I was listening to something that you said, Stacy, in regards to seasoning the appraisal for 6 months. Is that only on the delayed financing, or is that on any refinance?
On any refinance, if they've owned the property for at least 6 months, we can use the new appraised value. If they're wanting to refi before 6 months, we're stuck using the purchase price.
Good.
Assuming the purchase price is less than the appraised value.
Right, exactly. Okay. All right, perfect. That's good to know. That's really good information, especially in a market like today. So very good information. But again, for all of you that are on the call here on the webinar, Angel Oak is again a Bee's Knees sponsor for our 2023 FAMP Annual Convention and Trade Show, Hilton Bonnet Creek, August 2nd through the 5th. What you missed today, or if you want to see these individuals in person, they will have a booth at our trade show, as well as there'll be a speaking session. So they will be all around to speak to you and answer your questions and so forth. I hope you don't mind that plug, guys.
No, not at all. 406. There was one question here about six months reserve. Sorry, Linda. There was a question about 6 months reserves. We do require 6 months reserves, but that's probably an exception. You know, I talked about 30% of the loans we close don't meet our guidelines. That's probably a very common exception we get overturned. So sorry.
No, that's great. I'm glad the questions keep coming in. So again, we thank everyone. This will be this has been recorded. It will be on the FAMP website under our library, our webinar libraries. Videos. So any last words, guys, before we say good morning to everyone?
I'll go to Scott first. Scott, anything in closing?
No, in closing, I just want to thank everybody for attending today. Thank you to the FAMP for always being such a great partner. We love coming on here and talking about non-QM products and programs and sharing the knowledge and the love. And to all the originators on the call, take advantage of those marketing materials we just went over. As John said, I think it's the most underutilized tool in the game. And as we've said a couple of times, it is free to you. It blows my mind that it's not used more, especially in today's market where, let's face it, origination is a little tough. You want all the tools at your disposal. So take advantage of it, guys. Thank you.
Stace?
Well said, Scott, well said. Thank you, Linda and FAMP, of course, for having us. And we really appreciate your guys' business. Thank you for letting us present. And if you have any questions, my takeaway is don't ever turn a loan down without at least calling your Angel Oak rep and seeing if we can make it work.
And I agree, both Stacy, Scott, great. You know, again, if you're before you turn down a deal, but I would really encourage everyone on this call to really proactively use that underutilized marketing portal and